So I need our attention, right? And also we'll make room for questions. Okay. So I want to talk about storyline and entries, right? Storyline and entries combined. So the first thing first we're going to deal with, we want to keep it as simple as possible, right? One of the ways, in fact, one of the ways that you're already beginning to understand the concept and you are beginning to get a hold of it is that your chart is going to be so clean that the only thing you're going to find on your chart, right, is just going to be two major tools, right? The two major tools you're always going to find on your chart is number one is going to be this vertical, or maybe, I don't know if it's called vertical or horizontal, right? This one that helps you to identify your key level. And the next thing is going to be your long or short tool, right? That is going to signify if you are selling or buying, right? So because at the end of the day, you figure out that what you want to do over time is to be able to simplify the entire process, right? Do you understand? So that is what you want to be able to do, right? The moment you start seeing your charts that you are still doing, I might be wrong, right? The moment you see that you're still doing mark here, mark there, mark there, all of those things, right? I'm not saying you are not getting it, though. No, don't get me wrong, right? It might just be, at the end of the day, you might want to do what best works for you. Do you understand? So you might want to do what best works for you, right? If that is the only way you feel you're going to maybe understand everything, right? It makes a lot of sense. Absolutely makes a lot of sense, right? Uh, so let's talk about storyline and entries. Let's talk about entries, right? Let's talk about storyline. Let's start with storyline, right? So we have, let's say we're starting from the daily time frame, right? Um, so let's say we want to build bias from the daily, right? So we have the daily here, right? So we have, this is the daily time frame, right? So let's say this daily is going to be like our daily key level, right? We want to build a bias from the daily. We can also use this one as a 4 hours, right? But let's start with daily. So let's say, for example, we want to build a bias from the daily time frame. The first thing first we want to be able to, talk about is how price actually, the first thing we want to talk about is how price actually came into that particular key level on the daily time frame, right? We want to see how price is going to, trade very close. Price is coming to this particular daily key level, trades into it. But we know that one of the things we want to pay attention to is the momentum, right? We want to see if price is going to break above that daily key level, right? If price breaks above it with a heavy momentum push to the downside, because if you study your chart also, there are times that price is going to break above a key level like this, just a little, right? Just like a little bit, a little body above that particular key level. That doesn't mean that price is going to, just continue to buy and yeah, right? Which is possible for price to buy like that. But one of the things we're always going to be particular about is putting context to the trading, right? So we want to see if we want to pay attention to how price, the momentum at which price comes into that particular key level. So let's say price comes into the key level and breaks above it with a heavy momentum push to the upside, like not just like it breaks above it as a body, like it breaks above it with an heavy momentum push to the upside, right? We know already that we can begin to look for, buy opportunities at that same key level that got disrespected, right? So, but at the same time, as we pay attention to the momentum, right, it helps us to become flexible because if price comes into that particular daily key level, right, and it taps into it with an heavy momentum push, then it begins to react, right? The first thing we want to be paying attention to is how price reacts, right? So let's say price taps into the daily key level and it reacts and it closes below that daily key level, right? So the first thing first you want to pay attention to in building a bias from the daily time frame, right, is that you want to see how price taps into that particular key level, and number two, how price closes below, right? You will see the way price closes below, which is candle closure, right? Now, these two things that has happened on the daily, the candle, the daily, rejecting the daily, and also, how price closes below. It is not enough to now for you to now begin to say, you want to begin to sell, right? You just begin to look for selling opportunities on the lower time frame, like 1 hour. No. The next thing you want to do is you have to go one time frame lower, and you go to, if you go one time frame lower, you're going to the 4 hours, right? So you move one time frame lower. So if you move one time frame lower, you want to look for what we call a breakout, right? So on that same daily key level, right? We want to see these 4 hours give to us a sweep and a break, right? We want to see price give to us a sweep and a break, and price continues to move to the downside. So first thing first, we want to talk about, we want to really clarify is being able to build bias. So you want to see that on that daily key level, right? We want to see price sweep liquidity and give to us a breakout, right? This is a break of structure, right? This one here is going to be a break of structure on the 4 hours, right? You see, because from the left-hand side, you see that the order flow was actually first bullish, right? Now that the order flow is actually bullish, the next thing you're going to see is that if price breaks below the most recent high that is being created, right, from the bullish order flow, right, because the entire bullish order flow here, right, was sponsored because of this daily, price was coming to this daily key level, right? So when we move one time frame lower, we would see that daily rejected daily, then we saw 4 hours give to us a breakout, right? 4 hours give to us a break of structure, right? By sweep of liquidity break structure. So that break of structure is going to signify that price wants to continue to move, price wants to, move downwards now. So what that tells to us is that the daily rejecting daily with the 4 hours giving to us a break of structure, it means that your 4 hours and your daily are in sync, right? So this is where patience comes in, right? So sometimes you might not see a break of structure like this. So what you might actually see is what we call a breakout, right? What we call a breakout. So you might see that price has actually rejected, like daily tapped into a daily key level, right? And after daily tapped into that daily particular key level, we can see something like a breakout, right? So what that breakout means is that we will see that daily, because of this rejection that is actually happening here, that rejection on the 4 hours time frame can just be one candle selling, right? Before this daily candle closes, you will see that the whole time that this particular daily candle was actually rejecting, you see that on the 4 hours time frame, you see that the 4 hour was selling, right? As it was selling, it was creating for us a bearish order flow. But primarily for us, what we are going to see do is that it is going to give to us a breakout. So that breakout means that price was, because of this rejection on the daily time frame, the 4 hours was giving to us a bearish order flow. So what price did was that we saw how these 4 hours gave to us a breakout. You see that 4 hours is going to give to us a breakout, right? Many a times you are not going to see price giving to you a breakout like this where you see lower low, lower high, lower low. No, many a times the kind of breakout you're actually going to see is this. This is the type of breakout you're going to see. You're going to see something like this. Yeah, no, this is what I want to do. So the breakout, many a times you're going to see the breakout like this on the 4 hours, right? You're going to see the breakout like this. So what price is going to do on the 4 hours is that price is going to break below this particular external range liquidity, right? This low that is being created, right? You see that sometimes on the 4 hours, you're most likely not going to see a sweep and a break. What you're most likely going to see is a breakout like this, right? So that breakout on the 4 hours time frame, if you move one time frame lower, right? That is from 4 hours, you move one time frame lower. These breakouts that you see on the 4 hours time frame, what you are going to see on the 1 hour is going to be a liquidity sweep, right? You are going to see a liquidity sweep and a break of structure, right? It's going to show to you a liquidity sweep and a break of structure. So on the 4 hours time frame, you'll see that price broke out, right? We had a breakout, and on the 1 hour time frame, when we went one time frame lower, we went to the 1 hour time frame. So So you can see where we are coming from, building the bias, right? Daily rejected a daily time frame, daily key level. 4 hours will either give to us a liquidity sweep and a break of structure. Looking to the left for this type of scenario, you will see that we had a bullish order flow because of how this price was actually trading to this particular key level. So we see that the structure now shifted because we had a break of structure because the structure shifted. We broke below this particular low. So we now see that daily and the 4 hours are in sync. So which means that we should look for selling opportunities. So many a times when we don't see sometimes if we don't see the breakout structure, many a times what we're most likely going to see on the 4 hours is going to be what we call the breakout, right? So the breakout means that the order flow is just bearish. Who else can hear me clearly? Somebody said my network is breaking. Who else can hear me clearly?
Can hear you fine, sir.
Okay, thank you. So you see that on the
Fine from here, sir.
Okay, thank you. Femi, please work on your network. So you will see that many a times if you don't get this 4 hours, if you don't get this 4 hours breakout structure, the reason why many a times you're going to get this 4 hours breakout, right? Many a times the reason why you're going to see this breakout is maybe because of the momentum at which maybe that daily momentum that moved price to that daily key level, right? Just one candle moved it, right? Then we began to see that rejection, all of those rejection. So the rejection that was actually created on the daily time frame, right, now give to us this breakout. So when you see this breakout, like you see 4 hours give to you breakout, just move one time frame lower. The breakout you see on the 4 hours on the 1 hour time frame is going to show to you a liquidity sweep and a breakout structure, right? So that means now it tells you this is what they call inter-time frame and multi-time frame analysis, right? So what that means is that your 1 hour, your 4 hours are in sync with your daily. So we can now begin to look for more selling opportunities. Now, one of the things I need to add, right? I've said it in passing many a times, but I want to emphasize it again, is that for the fact that you are building your bias on the daily time frame doesn't mean that you are going to see price sell all through that day, right? What price can actually do, one of the things we need to understand about key levels is that price can start a sell from a particular key level, right? It will start from a particular key level and it can end at a particular key level. So what that means is that, we said storyline and entries combined. So what I'm trying to say is that on the daily time frame, price can give to you a rejection on the daily key level. Let's say price reacts from an A-shaped key level on the daily and gives to us a breakout on the 4 hours. And when we move to the 1 hour time frame, we saw a liquidity sweep and breakout structure. Remember, we have not even started talking about entries, right? You can see that many a times that entire day, daily can sell, right? Now, this is the daily now, but I'm just trying to say I'm building something on the 1 hour. You will see that daily, all through that day, we are going to sell. And the moment we get to a V-shaped key level on the daily again, we can now begin to see price reject, right? Price begin to, reject from that daily key level. Then you will see that price will just continue to move to the upside. So for those people that many a times you want to just hold a trade because you built your bias from the daily, you don't want to hold it, until until you send a trade to hell, right? It doesn't work. It works fine, but many a times it's not always going to be like that. And the reason is because when it comes to when a trade has started a bearish storyline, right, which is a bearish bias, you can know when that bearish bias or a bullish bias has ended. One of the ways you get to know is that when price restarts, the same way the area which price starts that bearish storyline or the bias, if it starts from a daily key level, there is every tendency that bias is going to end at another daily key level. So let's say price starts at a daily A-shaped key level here, right? And after they started rejecting, price gave to us a breakout on the 4 hours and gave to us a liquidity sweep and breakout structure on the 1 hour. So we know that our 4 hours and the 1 hour in sync with our daily, right? So now let's say the moment that we have this sell confirmation that we know that a bearish storyline has started. How do we now begin to figure out that the storyline has ended? What you can do is that look for the nearest daily key level, right? It could be a V shape, it could be an open close. So let's say we have an open close on the daily as well, not 4 hours now, right? The daily. One of the ways you know that a daily storyline or the daily bearish bias has ended, either bullish or bearish, is that price will start from a particular key level and end at a particular key level, right? Then it will now shift its bias again and continue in maybe the opposite direction, right? So let's say we started from a daily A-shaped key level, 4 hours gave to us a breakout, 1 hour gave to us a breakout structure, we got an entry. We are going to be looking for the next daily key level. That is the next place we want to see price react from, right? That should be the most ideal place that we want to take profit from. So the same thing applies on the 4 hours. Let's say you build a bias. Let's say you have a liquidity sweep and a breakout structure on the 4 hours, right? And liquidity sweep breakout structure on the 4 hours. Then you see price tap into a particular day, a 4 hour key level. Then 1 hour give to you an engulfing. So let's say you play the 1 hour engulfing entry. The next available 4 hour key level, right? It could be the V-shaped key level that is being created here, right? That should be your most ideal place that you want to see price tap into, because since you are building the bias on the 4 hours, right? You waited for confirmation on the 1 hour. The 1 hour confirmation you waited for was the engulfing, right? The moment you play the engulfing, your nearest play, price has the ability to just continue to move to the downside, no doubt, right? But the most ideal place, right? Because as much as you want to master your entries, you must also master where you want to exit from. Because what you will see many a times is that price will play the 1 hour A-shaped key level, trade down, like momentum is going to kick in into the nearest 4 hour key level. The moment price taps into a 4 hour key level, you will just see that that same candle that tapped into the 4 hour key level starts to reject. Then you now begin to ask yourself, I didn't take profit, I didn't break even, only for price to, hit your stop loss and begin to go in the opposite direction. You will now figure out that at the end of the day, your entry here, your bias for the sell was right, but your exit was wrong, right? Because a 4 hour storyline will start on, or a 4 hour bias will start on a 4 hour key level, and it will end on a 4 hour key level as well, right? So we are looking for the first 4 hour key level that we want to build our bias from. So let's say 4 hour rejects from a V-shaped key level that got disrespected, right? Then we are waiting for we are going one time from lower 1 hour. We are waiting for what price to give to us an engulfing. That is enough. Just getting an engulfing is enough as a 1 hour confirmation, right? We want to see price tap into that 1 hour A-shaped key level that is being created. I don't know. Are you getting what I'm saying? Let me use a proper graphic representation, right? So let's say, for example, we have something like this, a V-shaped key level that got disrespected on the 4 hours, right? Now that we have this V-shaped key level, what's wrong with you? So we have this V-shaped key level on the 4 hours, right, that got disrespected. Now, we know that this is the 4 hours. So we know that we want to build a bias on the 4 hours time frame. Now, I want you to pay attention to something, right? Look at this. If we have this particular low that got disrespected, especially on the 4 hours. I'm even speaking in respect to gold and maybe USD, CHF, and GU, right? So you have a 4 hour key level that got disrespected. Let's say you want to build a bias from the 4 hour. So the first thing first we had was a breakout. Why, right? So the breakout tells us that the order flow is going to be to the downside because also it's on the 4 hours. Then we have a V-shaped key level that got disrespected. So the next thing we want to do on the 4 hours is that we're going to move one time frame lower, right? On that one time frame lower, we're going to the 1 hour time frame or 30 minutes, right? And the only thing we are going to be waiting for as a confirmation is that on the 30 minutes time frame or the 1 hour time frame, we want to see what we call an engulfing, right? The moment we see an engulfing, the engulfing is going to create for us a fresh A-shaped key level, right? So the engulfing is going to create for us an A-shaped key level, a fresh one, right? So what we want to now begin to see is that A-shaped key level that has been created, we are going to see price come back to it, tap there. This is where our entry is going to be now, right? Now, if we know that this is where our entry is going to be, we are looking for the nearest. We are not exiting at a 1 hour key level that is being created. No. Your nearest point of exit that you want to see price retrace from is going to be a 4 hours key level. You want to see price retrace or begin to react from a 4 hour key level. So because all of these retracements that you are seeing that is happening, right? Don't forget, you have a 4 hour key level here that got disrespected. You move one time frame lower, you're looking for continuation. All of this retracement you are seeing is going to happen on the 1 hour time frame. The moment 1 hour gives to you a fresh A-shaped key level after engulfing, right? We are not expecting price to begin to turn from begin to react and maybe go in the opposite direction from a 1 hour key level. We are looking for the nearest 4 hour key level. So let's say, for example, we have a 4 hour open close that is resting here. That becomes our first ideal point of target that we want to see price trade into, right? Price can tap into that 4 hour open close, retrace a bit, come to another A-shaped key level, then before it now begins to continue to move to the downside, right? But we want to pay attention to the most ideal place we want to see price retrace from. So all I'm trying to tell you is that if price starts a storyline or a bias from the 4 hours time frame, that same storyline has the ability to end on that same 4 hours, nearest 4 hours key level. So price creates an A-shaped key level. We tapped into it, right? The moment price trades into the nearest 4 hour key level, let's say a V-shaped key level, you will see that price will just begin to react. Many a times it will react, do a deep retracement, before it will now continue to move to this direction, the anticipated direction. Or sometimes it can do the deep retracement and it will just continue to, price can just continue to buy, right? So as much as your entry is important, your exit too is important. So brings us back now. So this is just like an example I just made on the 4 hours, right? This is an example I just made on the 4 hours. So 4-hour V-shaped key level got disrespected, overlapping with an imbalance. I'm already going faster than myself. That should be around, entries, combining storylines and entries together. So the same way I explained the 4 hours is the same way you now want to deal with the daily, right? So if you build your bias from the daily time frame, if the candle rejection started from the daily, we are looking for only 2 things, right? 4 hours liquidity sweep and break. If this does not happen, we want to see this. We want to actually see the breakout. The moment 4 hours gives to us a breakout, move one time frame lower, either the 1 hour or 30 minutes, preferably 1 hour. This breakout you see on the 4 hours, on the 1 hour time frame, is going to be a liquidity sweep and a break of structure. Do you understand? The moment you see price gives to you a liquidity sweep and a break of structure, the next thing you want to put down on your journal, right, is that on your journal, you are going to be putting down that your 1 hour, your 4 hours are already in sync with your daily, right? The next thing you want to be looking for, there are 2 major things now you're going to be dealing with. Number 1 is going to be, how can you join the sell, right? So the first thing you're going to be looking for is the sell, to join the sell. And number 2, you want to look for the nearest daily key level that you are likely going to exit from, right? There's every tendency that price can break below that your exit on the daily and continue to move, in your anticipated direction, like do 2,000, 1,000 pips or 500 pips. That's not your business, right? Your own is that you want to be able to repeat the same process consistently, right? So if your entry from the 1 hour to the next daily key level gives to you like a 1 to 4, 1 to 5, just take your 1 to 5, 1 to 4, get out, right? Do your 1 to 3, get out, come back the same. The next day, repeat the same process and all of that. So if a storyline starts from the daily time frame, right, it must also end on a daily time frame, right? It must also end on the daily time frame. It must also end on the daily time frame. And also, so let's put this in perspective. Let's say you want to build a bias from the weekly time frame as well, right? So this would also help. This will also help. Let me add this to it. Let me say this. So let's say you want to build your bias from the weekly time frame. Okay, somebody. No. No, no, I'm good. So, so one of the things you are going to do is, let's say you are building a bias from the weekly time frame, right? So if you are building a bias from the weekly time frame, you know that you need to go. Let me use I want to use a fresh slate, because, so let's say this is the weekly time frame, right? Right? So let's say this is the nearest weekly key level again that we want to see price trade into, right? So don't forget, if weekly time frame trades into, so let's say we have price trade into a weekly key level. So price trades into a weekly key level, let's say an A-shaped key level on the weekly time frame, right? After price trades into an A-shaped key level on the weekly time frame and it begins to reject, right? So we know that price rejecting is not just enough, right? The moment we see price rejecting and how that weekly candle closes, right? The next thing we want to do is that we are going to move one time frame lower. So we are going one time frame lower. Let's say we go to the daily time frame, right? So on the daily time frame, we are looking for either a liquidity sweep, right? We're going to be either looking for a liquidity sweep and a break of structure, or we're going to be looking for a breakout on the daily time frame. The primary purpose of being patient enough is to wait to see that daily is in sync with the weekly key level. So you have a break of structure here, you have a breakout here, right? So either daily gives to you a break of structure or daily gives to you a breakout. So the moment you see that your daily is in sync with your weekly rejected the weekly key level, gave to us a close below the weekly key level, and the daily gave to us either a liquidity sweep and a break of structure or a breakout. Majorly for us, it could be a breakout, right? The next thing we want to do is, the daily is not enough. We'll just go to the 4 hours time frame. So the 4 hours time frame, we're only looking for We can also get entries on the 4 hours, right? With a good, with the tighter stuff like 10 pips, 11 pips, 12 pips, it doesn't matter, right? So don't forget, the storyline started from a weekly time frame. We expect it to end on a weekly key level. It started from a weekly key level. We expect that same storyline, that bias, to end on a weekly key level. So as much as we know the key level that the storyline started from, the bias started from, we are paying attention to the most recent, the closest key level on the weekly time frame that we want to see price run into. So daily is now in sync with the weekly because we swept liquidity and broke structure, and also we broke out here, right? So the next thing is that on the 4 hours time frame, we are waiting for price. Maybe on the 4 hours, let me use this. So let's say we move from the daily. Daily is now in sync with the weekly, right? So on the 4 hours time frame, we are going one time frame lower. Let's say we have this. So on the 4 hours time frame, price came to tap into this V-shaped key level that got disrespected, and you got an entry there. There's every tendency, right? So first thing first, the first most ideal place you want to take profit from, right, is because you understand that price would move from internal range liquidity, right? Don't forget that, right? We know that price is going to move from internal range liquidity, then go to external range liquidity, right? So from internal straight to external, right? So the first most ideal place using the concept of liquidity is going to be this external range liquidity. So let's say your daily and your 4 hours are already in sync with your weekly, and you got an entry on the 4 hours. So the most ideal place using the types of understanding liquidity is that the most ideal place you want to take profit from first is going to be the 4 hours external range liquidity. Why? After price takes out an external range liquidity, price could retrace, come for the next internal range liquidity before it continues. But all I'm trying to say to you is that as much as you have gotten an entry on the 4 hours, there is every tendency before this trade, before this bias, this order flow is going to shift from bearish to bullish, right? Before it's going to shift from bearishness to bullishness. What we are going to see is that we must see price trade into the next weekly key level, right? And we must see price react and either close above it. And daily must also give to us a liquidity sweep and a break, either a breakout or a break of structure, right? If weekly, okay, the best way to communicate these thoughts now, right? I hope we're getting it. If weekly is giving to you a bearish storyline, weekly rejected weekly, daily gave to you a liquidity sweep or break of structure, or daily gave to you a breakout. And let's say price now trades into a weekly key level, and now price has rejected from that weekly key level and it has closed above, right? Even though it closes above, it is not enough for you to come into the new week and begin to look for buying opportunities, right? The reason is because the most recent break of structure we have on the daily is to the downside, which is in sync with the weekly. Do you understand? Even though this weekly now tapped into this particular key level, rejected and closed above, if this weekly rejection at this weekly key level, right, has not given to us a breakout on the daily or a break of structure, right, we are likely just going to continue to sell to the downside. But if weekly has started this storyline here, weekly rejected weekly, daily gives to us a liquidity sweep or break of structure, or it gives to us a breakout, and price trades into a weekly key level, and it rejects and it closes above, right? And we move to the daily again, and from the daily, we could not find any breakout or break of structure. We know that we are going to continue to move to the downside until we target the nearest weekly key level. Do we get what I'm saying? Are we getting it now? Are we seeing how key levels, how storylines start and ends, how we can see that storylines can start and end, right? So we have like less than a minute, few seconds left. Let me end this one. I'll share another link so that everybody can join again, right? We've not even spoken about entries, right? Using the storyline and entries. So I'm going to stop this one so that we can start converting, everybody can join again.